All right, so I'll go on blue collar farm. So I'll go on YouTube. As I can say, it has been a while since we do an update of the blue colors portfolio. So we just decided that today might be a good time to update the portfolio. It's been about a month since we last updated the portfolio. All right, so in the Sunday morning, I would just decide say we're gonna do an update of the portfolio. So I could just get right into it. As you may know, we started the portfolio with some $400,000. All right. And we invested that $400,000 across or 5 companies or 6 companies. All right. So we had Mayberry investment, we had SOS stationary office supply, Jmmb was a part of the portfolio. And those 3 companies took up some 65 or 75% of the portfolio because we invested 25% of the portfolio in each of those companies at the outset. JFP. So what we did was to just keep back a portion of the portfolio to invest in IPOs. All right, so we got into the JFP IPO. We also got into the Dolla IPO. All right, and those has performed excellent for the portfolio. However, we had some cash on the portfolio that was having a drag on the return of the portfolio. All right. So because of the cash that we were keeping on the portfolio, we were not maximizing the return on the portfolio. So what we decided in our last video was to start putting those cash to work. All right, so we did put those cash to work from the last time we did a video until now. We also rebalanced the portfolio. All right, so we took some of the returns or some of the gains that we made on some of our stocks and reinvest those into companies within the portfolio, but companies that we believe had better chance of an upside. All right. So as you can see on your screen, the Mayberry, we sold down the Mayberry stock. All right. So we sold some 8,287 shares of the Mayberry, of our Mayberry holdings. So as of 20, we had some 17,000 Mayberry holdings. So we sold about half of that. All right, so we are now left with, let me just put that into some color screen so you can follow. All right, so this is what we had of Mayberry in the yellow line or the yellow cell. So we had some 17,000 shares of Mayberry stock. We sold off some 8,287,000 shares at $10.50 each. All right, so that give us a cash flow, a windfall of cash of some $87,000. All right, so we had that amount of cash to deal with. The Mayberry stock has fallen off since we sold out. All right, so Mayberry is now at $9.31, and that is some 15% fall off from we last updated the portfolio. We also sold off some of our SOS, meaning we are taking some of the profit. Remember, SOS increased by some 115% over since we had it. And we had some 16,556 shares in SOS, and we sold off some 17,800 shares, all right, of our SOS stocks. And we were able to come out at $11.53. All right, so you can see that in green, As a result of that, we had a cash windfall of some $90,000, almost $91,000. All right, so we had to find place to put that $91,000. All right. Also, we sold off our Dolla shares. All right, so again, we had some $11,200 shares. We sold the entire thing, all right, at $3.25. All right, and that gave us some $36,000. So in all, and with the cash that we had some $48,000 in cash. So with the selling or the reaping of some of the profits that we made on the Mayberry stock, on the SOS stock, and on the Dolla stock, we find ourselves with some $263,000 in cash, all right, that we need to put to use. One other thing that we did mention in our last video is that cash was having a drag on the portfolio, and we decided to use up all of the cash. All right. The reason for that is we still want to participate in the IPOs as they fall due. However, we do not need cash in the portfolio in order to participate in them. All right. We believe that we will be able to sell off any of the stocks within the portfolio because these stocks are quite liquid, all right, and they trade a lot. So we will be able to sell them for cash in time to participate in any IPO that we might find interesting. All right. Now, selling off of any of our stock is not that we do not believe that these stock can move. All right. It's not that we're saying that. So as I can see, we still hold some Mayberry because we still believe that Mayberry has more legs to increase. And we see where the company is doing some restructuring. All right. So the company is going to restructure its whole operation, meaning Mayberry investment. I think the notice that they sent to the Jamaica Stock Exchange was that they're going to have a Mayberry holding company. All right, so which will hold Mayberry investment and Mayberry investment subsidiaries. All right, so your holding of Mayberry will now become a part of the Mayberry holding company. So the stocks that you have in Mayberry investment, those will be substituted for Mayberry holding company. So you will now start holding the larger company instead of Mayberry investment. All right, so you will be getting stock in the holding company, the parent company then. And this is some regulatory, for regulatory purposes. And we do not see this adding any value to the company. All right, the only value might be added is the fact that it is the holding company will be registered in St. Lucia. The holding company will be registered in St. Lucia. There was some tax advantage in registering a company in St. Lucia. I believe that tax advantage has disappeared since there is some pressure from the United States and other developing economies as they try to, these tax havens, they try to get rid of the tax havens. All right, so I believe there is not much benefit from being a St. Lucian company anymore. All right, because that was the only benefit companies used to get from being a St. Lucian company, the tax benefit. SOS, we see where SOS is making a lot of moves. All right, so SOS has two divisions, the furniture division, and it also have the school, the books, the back to school division where it makes books, pens, those types of things for school students. All right. And we see where recently they bought a machine to shore up that harm of the business. All right, so the back to school, I mean the Seek, if you know the Seek brand, the exercise book with Seek mark on it, that's a part of the SOS operation. So what they're doing, they bought a machine the other day and they're expecting, or it seems that they're trying to shore up that harm of the business. All right, so we are still holding some SOS stocks. So what we did was to reap the profit that we made in that company. All right, so SOS still has room to grow. Pre-IPO, SOS was exporting. SOS was actually exporting furniture. All right, and we want to see SOS reach back to that level where it starts to export furniture again. All right, and that might see the stock increasing up to $15 per share. Jmmb, you know that Jmmb is one of our biggest conviction. All right, so we're doubling down on the Jmmb stock, and JFP, which is a furniture, even though it's in the manufacturing sector, it's really a furniture company. And we see we're in recent times, JFP has made a lot of moves. They have secured 2 contracts, one in the United States, and they recently seal an agreement with a company in the Caribbean. All right, so it's a Caribbean company that does business in several Caribbean or delivers furniture in several Caribbean countries. All right, so JFP has signed an agreement with that company, and JFP will be the manufacturer of those furniture for that particular company. All right, so we are looking for big things from the JFP stock, and we have upgraded our estimate of JFP stock to now $2. All right, so we're expecting that stock to climb even further. All right, so in terms of our returns on individual stocks, the Mayberry so far has returns on 59%, SOS 115%, Jmmb 13%, JFP 58%, and the Dolla has returns on 186%. All right, as of July 8, 2022. All right, so since we sold the Mayberry stock fell off from 15% since we up out of the company, or sold off a portion of our holdings. Since we sold a portion of the holdings, the SOS increased some 13%. So I guess we missed out on that. Jmmb increased only 1%, and JFP increased some 3% since we purchased additional shares in the company. The Dolla dipped some 7% since we purchased, since we sold off our entire holding of the Dolla company, or the Dolla stocks. Now we're really interested in the Dolla stocks. We understand the business, and we think the business is a really good business. So what we're doing though is to wait until we can get the Dolla stock at a better price, all right, to hop right back into that stock and hold for the long term. So we always advise people not to follow what we're doing, all right, or to coattail us, as they would say in the financial circle. That is to buy according to what we are buying, or selling according to what we are selling, or sell according to what we are selling. All right, so because of the simple fact that our risk profile might be something different from yours. Now, as you can see, our risk profile is really a high risk portfolio that we are running, all right? And it is non-diversified and highly concentrated. So you might not fit well into our risk profile, all right? Which is a high risk, non-diversified, and highly concentrated. Now, if you look at the portfolio weights, that is definitely the type of portfolio that we are running. All right, so as you know, we started out the portfolio with some 25% in our top 3 companies, which is Mayberry, SOS, and Jmmb. Both of those had 25% of the portfolio. JFP with a 10% of the portfolio at the start of the portfolio, and Dolla had only 3% of the portfolio. All right, now our last update, because of the increase that we experience in most of the stocks, the stock, the SOS stock, the Jmmb stock, all right, we saw where Mayberry had some 29% of the portfolio. SOS had 30% of the portfolio, and Jmmb with only 18% of the portfolio. JFP maintained its 10%, and Dolla had some 55% of the portfolio, due merely to the increase in those stocks. All right, so the movements of the stocks has really changed the profile of the holdings of the stock within the portfolio. Now, if you look at the cash, we had 12% of the portfolio in cash. All right, 12% of the portfolio in cash, that decreased to 8% simply because of the movements in the stock price. All right, so all of the stocks were increasing and giving us some more than a lot of double-digit return. As a result, the cash decreased as a percentage of the portfolio. Now, after rebalancing the portfolio, this is our new profile, our holdings weights within the portfolio. Mayberry now having a 13% of the portfolio, and this is below our holding at initial, all right, the initial stage. All right, so we decided to hold less of our portfolio at Mayberry. So Mayberry went from 25% to now 30%. That is due solely to the rebalancing of the portfolio. We decided to rebalance Mayberry's holding below our initial 25%. SOS is now 13% of the portfolio, and that is coming from 30% of the portfolio. All right. And as I said, we still believe that these stocks have room to grow, more room to grow, but we believe that other stocks has greater potential to grow, such as the Jmmb. Jmmb moved from now at 18% of the portfolio to become 41% of the portfolio. All right, so we are investing those cash that we experience, are the cash that we got from selling off of the Mayberry and the SOS and the Dolla. Those were reinvested in the Jmmb stock. All right, so we doubled down on the Jmmb stock. We also invest a portion of that money in JFP. All right, so JFP is now 28% of the portfolio, coming from just 10% of the portfolio. So we believe that JFP and Jmmb are our big bets, all right, going forward. So we're looking for big things, big movement from these two companies. So as you can see, Dolla is 0% of the portfolio as of now, and cash, we do not have any cash on hand. So we are fully invested, and our portfolio is reflecting a large bet on the Jmmb stock and on the Dolla stock. I mean, not the Dolla stock, the JFP stock. Those are the two stocks that we're betting most of the portfolio on. All right, so those two stocks make up some, what's that, 69% of the portfolio. All right, so we're looking for big things from those two stocks. Now, this is the return that we're experiencing as of July 9, 2022. The stock portfolio is now up for 122%, and that was coming from about 95% the last time we updated the portfolio. All right, and the total portfolio, when we include the cash that we have in the portfolio, we are now returning only 61%. All right, so the cash did have some drag on the portfolio, and that was right throughout the period, because we held a large amount of cash on the portfolio. At one point, we were holding some 25% of the portfolio in cash. That is when we had some 100%, $100,000 in cash waiting on IPOs. All right, and we reduced that to 60%. If you follow, you can see the cash balance. We reduced that to 60%, down to 48%, and now we're at 0% weights in cash. All right, so we made some mistake in holding a lot of cash waiting on the IPOs. All right, what that we were expecting, but the cash, we believe it would be far better to use those cash. All right, sell off those stocks when the IPOs drop and reinvest them in the IPO. All right, so there's an increase in our portfolio return, our stock return. And this is solely because of one, we sold off some of the Mayberry stock while the Mayberry stock fell off some 15% throughout the period, all right, since our last update. And that is the reason why we're seeing an increase in our return. All right, so we sold off a company that decreased some 15% in value. And the fact that we're putting more of the cash to use. All right, so cash hit the Jmmb, we put a lot, some $150,000 of cash in our Jmmb stock. Jmmb stock increased only 1% since then. All right, and the JFP, as we have put cash into the JFP stock, and that has decreased some 7% since. Also, our stock portfolio improved simply because the SOS stock has increased some, I guess, some 15%, 13% since we last updated the portfolio. All right, so those three things are having a positive impact on our portfolio. We sold down the Mayberry stock, and we see where the Mayberry stock fell off. The SOS stock increased, and the cash that we had on the portfolio also, we use up most of the cash. All right, now as a result of that, this is what the portfolio is looking like. All right, as you know, the the orange line is the cash, and you can see where the cash continuously fall off to now being 0 as of July 9, 2022. All right, now if you look at the gray line and the blue line, the gray line represents the total portfolio, which means our stock portfolio plus the cash that we have. However, the blue line represents only the stock portfolio. And you see where the stock portfolio was below the total portfolio value, simply because we were holding some cash that was not being used or was not gaining any value for the portfolio. All right. However, the difference between the two, the gray line and the blue line, is the amount of cash that we have. Now, as you see, as we continuously reduce the cash balance, you see where the stock portfolio value is getting closer to the total portfolio value. All right. So if you look at the very end of the chart, you see where both of them coincides. All right. And that is because we're not holding any cash in the portfolio at this time. All right. Now, what you want to notice at the peak of the portfolio, at the very end of the chart, you see where the total portfolio tapers off, even while the value of the stock portfolio is increasing. All right, and that is because we are putting more cash to use. All right, so those cash that used to be higher on the portfolio is now gaining some return, even though they are not gaining a lot of return. All right. So there you have it. That is the update of Blue Collar's portfolio. The portfolio is currently up 114%, and that's the stock aspect of the portfolio, whereas the total portfolio, when we add the cash to that, we're up just 61%. All right. However, what this means, this tells us a story that the more cash you keep in the portfolio, the less return that you will have on the portfolio. if it is that your portfolio is making a return, because the cash is having a drag on the overall portfolio. All right, so we have decided at Blue Collar Finance to use up more of the cash into our stock pick. All right, and yes, we're, as of July, we're holding no cash in the portfolio as we speak. So we are currently putting all the cash to use. All right, and as a result of that, we're seeing better returns on the portfolio. All right, so until next time, you're in Kyoto, it's Blue Collar Finance portfolio. All right, so this channel is dedicated to reviewing the Blue Collar Finance portfolio, and we do not suggest that you coattail us any at all, because our risk profile is different from your risk profile. So we are a high risk company, or we are a high risk portfolio that is non-diversified and highly concentrated. So until next time, chat to you.